You don't see FedEx usually move in 20% up or down on any given time. I guess down's more like you. I don't know what would move it up 20%, but down 20% is, you have to say something pretty dire to have that happen, I think, Steph.
Yeah, and I think, Joe, it's macro and micro, right? And I think we're all nervous about the macro. We've been talking about the economic data all week long has really been disappointing, right? You talked about the CPI, but PPI, retail sales, ex-auto is now down 2 months in a row. Industrial production missed. So at the same time, the inflation story is so hot and the job market remains strong. So the Fed is now being more hawkish and they're tightening into a slowing economy. And FedEx just reinforced that.
And slowing is a word that could be, you know, we need to know exactly what slowing means. Yesterday we had, Barry Sternlicht on. He's a real estate guy. So obviously, when mortgage rates double and you start to forecast what that could do to consumers, I can see why he was bearish. He was more bearish than a lot of people. Is slowing now capitalized? Because if we have really hot inflation with a rapidly slowing economy, the hard landing scenario comes back on the table in a big way. Is that what's happening here? 6% mortgage rates, is it going to do it?
Yeah, well, look, I mean, rates are going higher. They're going to be hawkish. Is it 4% Fed funds? Is it 5% Fed funds? We don't really know. But the point of it is that rates are going higher. And the problem, Joe, is that we're not going to feel it for another 9 months because there's a lag impact. So I don't necessarily think we're so much in a recession right now. We're definitely slowing. Absolutely. No question about it. But I think 2023 is more likely a recession just given that lag impact. When you look at the CPI number, I mean, if you didn't have gasoline down 10% month over month, that number would have been closer. CPI overall would have been closer to 10%. I mean, they're just going to have to be hawkish and they're going to have to raise. And that's the life we're living in right at this very moment. But it's a challenging time. We're already down 17% year to date on the S&P. The market is a forward-looking mechanism. So let's just stay calm, stay diversified, look for opportunities. FedEx is not one that I would be buying here because they have some, as I mentioned, some micro problems as well, some internal problems as well. Their express business, it's 50% of total revenue, and they missed EBIT and revenue by $500 million, and their costs were way higher than expected. So that one I don't think I want to be buying at this very point in time. But there are plenty of names out there that I think can survive, and maybe they go down, but they go down a little bit less.
Steph, it's almost a case study in how bad stagflation is for financial assets. So I referenced Barry Sternlicht again. He said you would have to be insane to be the Fed to see what the potential cliff we're on in terms of the economy if they continue to raise. You'd have to be insane to even consider raising if you cared about the economy. And you just said, given those inflation numbers, you'd be insane not to go maybe even at least 75 and maybe 75 again, or maybe even a point. And we've had other people say they need to go 1 or 2 points. Sri, so you've got people on both sides. How can you talk about both? How can you talk about the economy going off a cliff and we definitely need to raise rates much higher than people already think? That's like the worst possible scenario.
It is the worst possible scenario, but the Fed has two mandates. They've got jobs, unemployment, they've got inflation. And jobs actually gives the strong jobs numbers gives them the cover that they need so that they can be aggressive. I mean, the initial claims numbers, that was actually the bright spot of the week, right? It was down for the 5th straight week, and four-week moving average is down 8,000. So jobs remain strong. And so the Fed doesn't have to worry about that right now. And so they have to get inflation under control. That's their worry, because if they don't get that under control, we're in a whole lot. Yeah, we're in a lot more trouble.